The broadcast
Hi,
is now
so I'm
starting.
here at
All
AbleTrend,
attendees are
and
in listen-only
thanks for being
mode.
here. I'll be glad to go over the charts and the signals from today and recently, and we'll take a look at what the AbleTrend signals were and what you want to be looking for on your charts for whatever you like to trade. The AbleTrend signals work exactly the same no matter what charts you like to trade, meaning stocks, futures, short-term, long-term. It doesn't mean anything to the algorithms and the software. So it just depends on whatever you like. Obviously, if you day trade, you just need to be in front of the computer all day. And if that's what you like, that'll work real well. If you like more swing or more of a position trading where you don't have to watch it as often, and you use higher time frames like say daily and weekly charts, just for an example, for a longer term trade, that'll work fine. I like a 130-minute and a daily combination for a swing trade. 130-minute and daily works well for a swing if it's something that you like to maybe just stay in for a few days or a week or two. That'll work real well there too. And the reason we pick 130 is it's exactly 1/3 of a trading day. So you get 3 signals per day. So this is a daily, weekly, and remember, you always have to have all the time frames on the chart, and every chart is a multiple time frame. They must all agree to be a trade, otherwise it's no trade. It has to agree. And in this particular case, I use arrows for the weekly, and of course dots, and the price bars are for the daily. So if you have a blue dot, like right here, and the first blue bar, you get a big dot in the middle. That's what the first blue bar, that's what that means. And then we already had the weekly, which comes in once a week, the weekly buy signal for a couple of months before that. So at the beginning of this month, about 3 weeks ago, we had the buy signal here on IWF, 256. We're still in it in 268. So that's a $12 winner, looking good right there. And as long as it stays above these blue dots, you're safe, stay in the trade. Now, I wouldn't even consider getting out until the price closes under the previous lower row of blue dots. So it's got to close at the end of the day, because this is not something you're watching all day long. This is for longer term trading. You don't need to be at your computer every day for this. So if it doesn't close under this dot here, you're fine. It's just a pullback. It's a reversal if the bar turns to red. But if it just goes under the blue bars or pulls back, the bar turned to green, it's fine. You're safe. Just a normal pullback, which is the way the markets work. If you like to do a little more day trading, the mini futures are very popular for that. E-mini futures are very popular for day trading. We like the Nasdaq because it has a lot more volatility and it tends to be smoother than, say, like the ES. My second choice would be the Russell. That one moves a little slower, so some people might feel more comfortable with that. You also don't need as much margin too. So, if you have a smaller account, Russell would be good for that. So let's take a look at today's signals on the Nasdaq. You can see right at the open over here, we had a buy signal, a triple confirmation. We use 3 time frames on the intraday because it's so quick and up and down. It actually drives you pretty crazy, unless you're, if you got to get used to it, and you have to be very very disciplined, almost emotionless. If you're the type that's a little high emotion, high strung, probably day trading wouldn't work as well as a longer term chart, which will work great. So you can see over here, we've got the buy signal right at the open. I always say to be a little careful at the open because there's a volume explosion. And you can just see, look at the price bars, which is the high and low of the bar. Meaning in this 1 minute, it only went up and down a couple of points. Same thing here. This is all pre-market. Notice at 9:30, because I'm Eastern time, as soon as 9:31 comes in, all of a sudden the bar, look how much longer the bars get, which means there was a lot more up and down or a lot more volatility, volume explosion of contracts being traded at the open. So just be a little careful at the open. Some people like that because, more risk means more reward. but there is a lot more risk at the open. So you may want to wait for a sweet spot if that's too much risk for you. And everybody's different. There's no right or wrong. It just depends on your risk tolerance. But here it pulls back to the blue dots. It gets actually a half a point away from the blue dot, which that's fine. And then your next blue bar would be your sweet spot right here at about right around 10:05 Eastern. And 380 was the price. It kept on going higher. As long as it stays above the blue dots, you're safe. This is a 1 minute buy signal, 2 minute buy signal, and then the big arrow is the 3 minute. So everything is blue. Everything says we're going higher. Now, we put the stop always at the second previous lower row of blue dots. So for example, when the price is here, the stop would be here. But from where we got in here at about 81 to here at 401, you got 20 points on that one. Yeah, that's a 20-point winner. AbleTrend, gave a nice, that was a nice signal there. And that's a $400 bill for every one lot that you trade. That's just one lot. So I would move the stop up from here when you see two greens in a row. I want to protect that because, there could be some real snapback there. And, you wind up giving back a bunch of that. So as long as you're more than 10 points in profit, which is $200 for the mini Nasdaq, just stay in the trade until you get two greens. Like you say, well, I have two greens here. Yeah, but you weren't in any profit. We're just up a couple of points. So not gonna use the two green bar stop loss. But when you get two greens and you're up, in this case, 20 points, 21 points, move the stop from here. Let's move it a little tighter because you get two greens in a row. Got to get double greens. Otherwise, we just stay in the trade. It'd be silly to get out. And then a minute later, we would be stopped out over here. But that's a 20-point winner. That's a $400 bill right there. That's a good one. Okay, this is an obvious no trade zone. Any red and blue together. Leave it alone. Stay away. Don't do anything. It's too much risk. Okay, still no trade zone. We're waiting for triple confirmation blue. Or triple confirmation, meaning triple agreement red. There it is. It's triple agreement red. Got the big arrow. You need to have that one. It's the 3 minute, the 2 minute, the 1 minute, and a red bar. Triple confirmation. There it is. So we're going to go short. We're going to put the stop just a tick above the red dots, which is about 10 points away. And it almost got ticked out. And notice it comes right up to the red dot, bounces off of it, and goes back down. Now, if you missed the beginning or you just didn't see it, you didn't like it, whatever, you didn't take it for whatever reason, you're looking for a sweet spot. Now, we'd still be in the trade from the beginning. However, if you missed it, there's a sweet spot. Prices hit the red dots, and the next red bar is right here. So we'd be short here at 84 if you missed the beginning. Stop always at the second higher row, or if a blue bar comes in, well, then of course we're out. So we'd be out over here. Okay, we're in about 80, let's call it 80, 87. We'd be out over here at about 92. So let's say 5 points, only four. Let's say 5-point loss. First trade we made 20. We lost 5 on this one. Okay, no trade zone. When you're looking at this live, this is exactly what you want to see. Again, the big arrow is the 3 minute, 2 minute, 1 minute, and the blue bar. Okay, we're long here at 400, right at 14,400. Let's see how we did. If you're watching this live, because we wait for the bar to close. Once the bar closes, it will never, ever change again. So that's why you wait for that 1 minute bar to close. Well, that was sweet right here. I mean, that's a beauty. I mean, it just took right off. This was great. Okay, there's our two greens. So the stop, which would have been here at that point. Let's move it a little tighter because we got another winner here. Now we were plus 15 points, which is $300. So we're plus 15 points going into the trade. Now we're out with a 13-point winner. Now let's even call it 10, because I don't like to exaggerate. I like to exaggerate the losses. There's slippage, there's commission. It's about real life trade. It's not. We're not here to fool anybody. It's not about fake stuff. So we're up 25 points, which is $500, and it's 3 hours into the market. Okay, now we hit the dead zone, but it's optional. Perfectly fine to trade it. I would, especially the volatility's been really good. And that would be this would be a trade right here. There's your triple confirmation trade. Now, because the dots, well, actually, they were only 10 points, 11 points away. So you know what? Just put your stop just slightly above the dot, because the dot is our protection. The dot tends to block the price from going higher. So that's great. We won't get stopped down so easily. So we're short here at 80. Let's call it 89. Within a few ticks. And then we can get out right here, because we'd be out right here at 72 from 89. That's another 16, let's just say 15 points. So now we're plus 40 points. So we're up 800, 3.5 hours into the market. Okay, and you say, when do I get back in? Well, we're looking for, of course, a reversal. We had all blue, triple confirmation blue, but we're nowhere near that because we're at triple confirmation red. So we'll get in on a sweet spot. We can re-enter on a sweet spot. There it is. There's the blue. Red dot. It's hard to see it, but it's there. Red dot, red bar, red 1 minute, red 2 minute, red 3 minute. So, okay, we're short at 77. Looking good. Looking really good here. We got double greens, but we're not going to quite get ticked out. I put it 2 points above the top of those green bars. Now we're ticked out. Okay, so we pick up 12, 13 points. Again, let's only make it 10. So now we're up 50 points. Okay, now you can get back in. It's a little bit more risky. It's a multiple sweet spot. The first ones are usually the lowest risk. You got to, you just go with your gut on that one. If you want to play it safe, just go with the first sweet spot. Somebody who, hey, you're up $1,000 at this point, 50 points. Might say, you know what, hey, I'm doing great. Try it again. Just keep in mind, there's a little more risk in this sweet spot than the first one. So you should be short at 65. 2 greens here at 55, because that's at least 10 points. Put the stop 2 points above, never hit it. I'm just going fast. This is exactly what you would see live. Exactly. I'm just obviously making it go quicker. 2 greens here, stop goes 2 points above, never hit it. 2 greens here, stop goes 2 points above. Yes, we hit it right here. So out at 45, short at 60. Let's just call it 60. Now, again, let me make the winner a little smaller than what it was. Nobody's going to get it perfect. That'd be another 15 points, but I'm not going to count that because that was the third sweet spot. Actually, third sweet spot. Somebody who took it. The software gave us the winner, but we have to have some rules and some risk management. And the risk management tells us, let's hold back. Okay, obviously got a triple confirmation buy signal right here. Everything is lined up. 3 minute, 2 minute, 1 minute. They don't have to be perfectly under each other. So we go long here at 67. We were plus 50 points going into this. Not at 10 points, so our stop is still at the previous lower blue dot. Didn't quite hit our 10 points yet. Out here at 71. So we made 4 points on that trade. So let's call it break even. Even though 4 points is $80, let's not even count that. That'll just cover slippage, commissions, things like that. Okay, no, I don't see the big arrow. You might say, oh, isn't that triple? Nope. 1 minute, 2 minute, got to have the big arrow. No 3 minute there. And I'll just speed it up right there. We're short. There's your triple confirmation. Now that's a really long bar, and the dot is, 20-something points away. We're not going to put a stop up there. We'll just put it 2 points above the top of the red bar, the triple confirmation bar. I always want to put it above the dots, but that's 20-something points away. I mean, we're plus 50. I'm not giving back 20. We'll just put it a little bit above the top of the red bar there. That'd be fine. 2 greens, stop goes 2 points above. Oh, no, actually, we're not 10 points in profit. Nope. Now the stop would be here. Previous higher red dot. Not the first one, the previous higher one. Okay. Now we're break even because it's about where we got in. This is about where our stop is. Notice the dots are going lower. That's a good thing. And then it shoots up. So let's call it break even. And that's going to be it. It's the end of the day. So 50 points was a good day today. Yesterday wasn't, this whole week has been great. This whole week has just been terrific. It's been a great day every day, similar to this. So I hope you're finding it helpful. Got to be very disciplined. It's a grind. There's losing days too. I can promise you that. Many, many more winning days. But occasionally we do have a losing day. The markets are just very flat, very choppy, very sideways. The nice part about the no trade zones is we're not trading in a lot of the chop. Now we will certainly have some losing trades, but we're going to avoid so much of the chop that everyone else is just getting killed. One of those days where everybody gets beat up. We don't get beat up so bad because you got these no trade zones. And here's a perfect example right there. That's a no trade zone. You got a lot here, no trade zone. It just keeps us out of trouble. No trade zone. It works real well. Okay, let's take a quick look at the scalp chart. This is for traders who like to get in and out very quickly, like in a minute or two. And let me go back to the beginning of the day. So there would be the first trade right here, about 3-4 minutes after the open. And this is a real easy chart to trade. It just has to hit the blue dot with the blue arrow and close above it, but not more than 8 points above it, because we put a stop 2 points under the dot. And the max we'd have risk is 10. But this is perfect. It's just 2 points above the dot. 1 minute later, it turns out it went up 50 points, but we're just looking for 5. That's a scalper's mentality. We're just looking for 5. So, because every time you hit the 5 points, you win $100. Okay. So the next trade would be any one of these red bars here, hits a red dot, closes under it, but it turns out it went right back above. We lost on those. Okay. Rolling right along so far, no trade. Hasn't hit the blue dot, blue or red dot. Here, hit the blue dot, went under it. We lost 2 points on that trade. Okay. This hits the red dot, closes under it, and that's a winner because it came down 5 points. Just looking for 5. That's a target. It's $100, and that was a winner. Okay. Any one of these hits the blue arrow and clearly closes above it, and then a couple of minutes later we got the 5 points. So that was another $100 winner. Hits a red dot, closes under it. 2 minutes later we got 5 points. That's a winner. Hits the blue arrow, just barely made the 5 points right there. And that's how we do it. Keep it simple. This hits the red dot, closes slightly under it, as it does this one, as does this. And either one of those would be a winner because it clearly went down 5 points a couple of minutes later. So that's another $100, and that's how we use the scalp chart. So, for those who like to scalp and get in and out very quickly, very low risk. You don't win as much, but you certainly don't lose as much because you're only in the market a minute or two. That's very low risk. So it's been a great week. Really, really hope everybody's kind of keeping it simple, following the rules. You got to be a robot. No thinking, no looking at other indicators. Keep it simple because it's been the best year in the 17 years I've been here, and this has been a great year. Really, really great week. So anything I can do for you, glad to help. Feel free to call, email anytime. I'm always at my desk all day long, so I'm always here to help. And I hope this was helpful for you. So most importantly, anybody on a trial, I'll do the 15-minute one-on-one trading session. We can look at the markets live in real time because I can show you more in 15 minutes than you can do on your own. And you only get one trial, so I want to make sure everybody gets their money's worth out of the trial. And I'll do that the first few days you get it, so this way you're set to go for the rest of the month. And keep it simple. Do what it says. You'll do very well. Thanks for being here, everyone. Have a good night.